It's Chris Bowling.
It's Chris Fire.
We have a
Want to
special
see me?
guest. How are you?
I'm well. How are you
All
guys
right.
doing?
Good. We have Jeremy with us with Assured Partners Financial Services. Did I get that right?
AssuredPartners Financial Advisors, but very
Oh,
close.
so close.
Uh,
Close.
so we get to work alongside Jeremy quite a bit as he works with our clients and other organizations on their retirement planning and consulting. And as senior financial consultant, we wanted to bring you on to get to know you a little bit, but also to figure out kind of what are you seeing in the retirement space, some things that are trending, maybe employers need to know about their plans, but also what the participants need to know. So we'll let you kick it off. Give us a little background on yourself, Jeremy.
No, excited to be here and thanks for having me today. Love all the videos that you guys are putting out there. A little bit about myself, and I don't want to spend too long because this is the least important part of this conversation, but been in the retirement plan space for coming up on 9 years now. Started out at American Trust Retirement on the record keeping side and was lucky enough to be able to make the move over to AssuredPartners Financial Advisors just over 2 years ago now. And absolutely loved being able to have deeper conversations with plan sponsors, business decision makers, and their employees as we're out there trying to help them reach financial independence once they get to retirement years.
Yeah. No, that's good. And I assume, there's certainly more scrutiny on how those plans are run and making sure that people have money when retirement comes. But are you seeing trends in the marketplace today that, we've seen the markets go up and down, we've seen retirement accounts go down in value, come back up in value, but what else are you noticing?
Yeah, I think we're seeing kind of the second wave of trends. But it was back in like 2006 when the PPA restatement happened that auto enrollment and auto escalation really kind of exploded on the scene for us. And as a result of the Secure Act 1.0, CARES Act, Secure Act 2.0, some really recent pieces of legislation that have come out and had widespread effect on the marketplace. I think we're seeing a couple areas that are really going to explode. Number one is the availability of lifetime income solutions within retirement plans.
Yeah.
And it's really the answer to the old school pensions that a lot of folks maybe were familiar with from years in the past. And how do we pensionize the defined contribution 401k or 403b plans in a way that gives folks a lifetime stream of income so they don't worry about outliving the dollars that they've accumulated over their working careers?
That's a great topic.
And so I think that is, we're seeing all sorts of new products and services along those lines really starting to explode onto the scene. And I'm excited about what this means for folks, down the road and our ability to really ensure their financial future against longevity risk.
Yeah, that's a good point. Anything else you're seeing in the trend space right now, or maybe it's something employers need to know themselves?
Yeah, I think one of the other trends that we're going to see, and this one's going to be a little bit dependent on some operational things, is the student debt repayment solutions and how those integrate with retirement plans, and do they want to use the repayment dollars that people are making and then match them, those sorts of things. I think that a lot of the regulations are very well intended. Operationally, there's just some hurdles for us to clear yet, and being able to do that without cannibalizing all of the HR folks' times and trying to administer that sort of benefit. But I think that they're getting there much more quickly than I would have thought that they were going to get there. And so I won't be shocked if in the next year or two we don't have really strong partnerships with our record keepers and student debt repayment solutions to be able to offer those more broadly.
I mean, that's been a topic we've heard, probably, at least I recall talking about that in at least 2019 with a couple of clients, trying to get an idea of, is this possible? It might be, and it's kind of ebbed and flowed, but yeah, to have some good guardrails for how that would work, I think would be well received. Jeremy, you spend, and I know you and your team spend some time helping educate employees as well. So you are not just behind the scenes as a team managing the funds and just working with the employer, but what are you sharing with employees when you're out having education, meetings, or they're wanting to talk about their retirement, whether you or some of your team that goes out and meets with the employees themselves?
Yeah, and I think this is, one of the most important things that we do as a team in our work with the employees of our clients. And it really stems around allowing them to know what the most important things are for them. And the first thing is how much they're saving consistently. It is the single most important factor by several orders of magnitude over anything else that they do.
Right.
And so even if it's, we're not saving, exorbitant amounts right away, it's starting somewhere and then creating a plan for us to slowly work to that, higher savings amount over time for folks, because it doesn't matter where we invest or anything else we decide to do. As my good friend Josh Itzel likes to say, you can't invest your way out of a savings deficit. And that's one of my favorite kind of quotes to use with participants. And if we can get them, participating and saving at a high level, the hardest work for us is done at that point.
Gotcha.
And then from there, it's just making small adjustments to try to continue to improve where they're going to end up.
And I'm assuming too, if you're talking with individuals, it's, here's your opportunity with your employer sponsored plan, but you're talking about savings as the entire process. I mean, they have to be aware of that outside of just the plan itself. And you're kind of looking at that entire scope of, can you put money aside? And if so, where is it best deployed?
No, absolutely. Whether it's, maybe they've got a high deductible plan with an HSA option attached to it, or their 401k, or even if it's just an emergency savings account, right? Like, we know that there are limitations on how they access money from their retirement accounts or from an HSA and things like that. And, making sure that they've got adequate emergency savings reserves. So, in the event of an unfortunate circumstance, they're not, putting money on credit cards that they wouldn't like to put on there, or, having to take a loan from their 401k plan or whatever that might be. They're financially in a position to be able to, withstand some of those life events that maybe they weren't expecting to pop up.
Right.
Yeah. Chris, what questions you have as well? I mean, I think we got time for one more before our final one. So.
Yeah, well, I think you've answered it already, but I'll ask it a different way. Many employers are trying to figure out what is the best option for our younger employees that are coming into the working world with student debt. And and it's pretty much been, here's my 401k contribution as an employer. We're hearing so many employers saying that's important, but this younger population coming in, they don't care about their 401k. They need their student debt paid off. And, once again, it's something that you've already talked about, but is there any tip that you can give an employer as to, is there a better blend? Don't just start paying off contributing towards student debt, but is there a blend between 401k or 403b, whatever it is, and the student debt?
Yeah. And I think that it's really kind of dependent on, what type of position and income those folks are at, what the retirement plan looks like from a contribution standpoint. And that's where I think, having those conversations with their, advisor consultants or their service provider relationships, and trying to determine, what are the resources we can try to provide to our folks coming to the workforce out of college with debt, to make sure they're educated and understand, what is the appropriate mix. What are my options to try to pay this down with the least amount of interest or as fast as possible, or whatever that looks like, to try to ultimately, pay that down so we can redeploy those dollars to buying a house or a car or other things as they're looking to build a family and move forward in their financial future. And so there's not really a one size fits all approach, but I think it's just having those good conversations and trying to figure out what type of resources you can make available to those folks.
Love it. So Jeremy,
close it out.
You've had a long day, a tough day. Is there a quote? Is there a motto that you try to live by to try to get you through that moment?
Yeah, it's kind of funny because I coached baseball for a number of years too, out of college and actually in college for a little while. And one of my favorite quotes that I've used forever is, the only person we should be trying to be better than is the person we were yesterday. And so, not looking to compare ourselves to other folks or anything else, just saying, where were we at yesterday and how do we get a little bit better tomorrow? And constantly staying on that, path of trying to find small wins to improve, and you'll be amazed at where you end up.
That is great.
I love it.
Thank
Jeremy,
you for joining us
spending some
today.
time with us.
Yes,
absolutely, fellas. It was a pleasure.
Absolutely. Thanks, Jeremy. We'll see you.